Alright, so I'm not gonna plan on editing this video, just a clean cut. But first of all, uh, good to see you guys. How you been doing? How's trading going on for you? Hopefully you haven't lost any money in this dump that's been happening for a while right now. Um, Especially on this Monday, a lot of boring action, not much happening. I'm trying to avoid trading as much as possible as well. Um, Now I have here a bunch of charts that, well, all of these are pretty much old stuff and analysis that we've been working on, but pretty much mostly our analysis here uh, played out somewhat accurately. But right now we're just stuck in this consolidation here between this 57k level and this 59k level right here, and yeah, it's been very confusing. But we did take a good trade. Let me go into the perpetual chart. Why is it taking long to load? There we go. So this is the perpetual chart, and oh shit. Okay, the position. I forgot I removed the position. Let's go into our Telegram group, and if you guys haven't entered our Telegram group just yet, I'm going to include the link in the description. um, where we post pretty much everything. I post a bunch of trades here, very much profitable as well. Uh, Heavy whale alerts as well. If there's like big transfers here where we know some selling or buying is gonna happen, I'm always constantly updating everything that happens in the market as well. Any major news, members also provide their coin requests here, so we can run analysis and stuff like that. And mostly we're just chat a lot as well. So a very nice community here. Anyways, so yeah, this was the trade that we took, and it actually played out very well. We did hit two targets here. I think this was the breakout point. Yeah, this was the breakout point. So we hit two targets here. Let me expand this a little bit. So we had this breakout here, a bit of a retest. There's a lot of faking out happening here, a lot of noise. We entered somewhere around here, and I pretty much closed the trade entirely between 59,200 and 59,600 here, just because I felt like the momentum was dying down. But we did have 6,200 as a target, and it pretty much got hit twice right here. And then we had the dump happen. Now this area here did create somewhat of a fair value gap, but it pretty much got filled today. But then again, um, we're not trading this because this is extremely choppy. I mean, even if you look at the candles, one up, one down, one up, one down, one up, one down, and they're always within the same opening and closing of each other, up until here. At least a little bit of volatility, and then a little bit of a positive price action, but it's very choppy, it's very confusing, and it's not safe to trade. Okay, I know a lot of aggressive traders entering trades here, but personally I'm a bit conservative, just because I don't want to lose money, obviously, and I have lost money trying to trade choppiness like this. I do not recommend it. Okay, and a lot of my guys here asked me for entering trades. I told them I'm definitely not entering trades here. We do have some spot buy calls at 54 and 49, just because I'm expecting this dump to continue. Actually, it's just taking a little bit longer. But anyways, I think it's best, if we just clear out the entire chart, remove the drawings, and let's create a new chart. How about that? Run a quick analysis here. And we'll start with the fib. I think the trend-based fib would work best, maybe. Or no, that's not how a trend-based fib works actually. The trend-based would be pretty much something like this. Okay. Um, You know what? Let's stick with the regular fib. I do have my own presets for that as well, just so we can accurately calculate the bottom here. Or was it the other way around? I don't remember. Okay. Same. Anyways, so this is our current fib. Hmm. Yeah. So we do know we found a bounce here somewhere around. Why is this not showing? Wait, I have a setting for this by default, a template. No, not the scalp one. What the fuck? Okay, let's just extend lines left and right. Um, Alright, we'll just leave it at that. So we found a bounce here at this fib, which is the 54k at 0.7, and we're currently just trading within these two lines right here, these two fib lines. This is acting as a resistance, and this is acting as somewhat of a support. We are having a bit of fake outs here every now and then. Realistically, the was it the this one, the blue one is the 100 MA, I think. So we're basically just trying to break above the 100 MA, and we're finding difficulty doing that. Besides the 100 MA, another good indicator to look at is the bull market support band. Okay, so this is the bull market support band. Right, as soon as we broke down here the first time, it flipped, and we've been trading below it ever since, and we've just been trying to break above it. Now, if we do consolidate a bit longer here, the next time we do have a push upward up towards 60k, we're gonna try and find some support above the support band. If we do find it, I do expect some continuation upwards. But so far, it seems like, yeah, this the bull market support band is acting somewhat of a resistance. Um, I don't look much at that as much as I actually look at the Ichimoku cloud, because I don't know, it just seems a bit simpler to look at the Ichi cloud, and Ichi cloud is still within a resistance line as well. Okay, and this resistance line seems to be going up slightly, converging upwards, so we might have a move upwards. But that's very hard to clearly identify. What we do need to look at to clearly identify shit like this is, um, alright, that's a foreshadowing right there, but what was it? Order book. There we go. Alright, that's one thing, and then go into the combined order book as well. And we'll take a look. We'll take a look at another liquidation chart as well. This one here. Okay, so let's exit the 5 minute and enter the 24 hour. And we'll notice a lot of choppiness. Alright, perhaps 24 hours is not too clear. Let's stick with 1 hour. Chart is a bit clear. Right now, most of the liquidity is clearly to the downside, so this is why I say that I'm still expecting more moves downward than upward. And you need a big push up. Let's look at the 3-day just to be clear. Okay, some huge liquidity here. But they pretty much closed in the last 3 days. Alright, so it does seem like the next move is going to be downward than upwards. I did say I am expecting a move upwards today when I was talking on the Telegram group. Just because, first of all, there was a fair value gap that had to be filled on the chart. And second of all, most of the liquidity was to the upside, but it seems like now most of the liquidity is building up on the downside as well. So another move to the downside is going to happen. Now, let's run a quick analysis on this, because besides the Fibonacci level, I don't really rely too much on the Fibonacci level as much as I actually rely on trends. I trade trends. And when I say I trade trends, I go into the 4 hour, okay, and I use horizontal rays. This is why you always see these choppy lines um, on my charts. One of the ways I use trends is I always try and use my cursor to identify strong support areas. Now this I would call somewhat of a strong support area, and this would be somewhat of a support resistance area. As you can see, this was a resistance for 2-3 times before it broke out here. Um, and right now on the same line it's acting as a support here. So I would draw a horizontal line here, which coincidentally matches with the Fibonacci level. And let's take a look at another one here. Alright, so this one's clear. Uh, support here that was broken, flipped resistance here, and then created support multiple times here. That's where I would draw another line, which is at 64K, which coincidentally as well is the upper band of our current resistance level that we're stuck in. Now, if you want to take a look at the lower band of our resistance level, I mean, it's pretty much clear here. I don't even need to draw it. You have support here, resistance here. It's pretty much right around the same level as this fib, 61K fib. So I'm not going to draw this one. It's pretty clear. Um, and then I would also look at previous trends here. So we have 56K. This was a previous bottom. And as you can see, we've been supported on it once so far. So I like drawing these lines because it gives me a clear idea of where we could find support at moments where a local support is broken. So let's say 57K was broken, then I'll know for a fact that we'll at least find some support at 56K, which, by the way, if you look at it, somehow it kind of did act as support multiple times here during the uptrend when we were rebounding from this breakdown. And then another time this was the resistance level that we had to break out of. So it was resistance once and then twice before a breakout here. So this is what the market trades. It trades psychology. So they'll look at 56K as a previous bottom and be like, oh, okay, so we found support here before. We should find it again. Unless that support is broken, then it's probably going to act as resistance. So we'll sell at 56K up until, you know, a huge whale moves in and puts a ton of money inside. So like I said, I always like to trade trends. Um, but so far, this choppiness is very hard to trade. And like I said, I'm a bit of a conservative trader. I've lost enough money in the market to know that this kind of sideways action should not be traded. Now, besides that, actually, we've talked about Bitcoin enough. I want to look at the Bitcoin dominance here because I just went into the same chart. When you're looking at choppy sideways motion for Bitcoin, um, you expect the Bitcoin dominance to go down, which in fact it has went down. Huge sell signal here that we got from my indicator. Um, by the way, if you're gonna ask me about my indicator, I'm still working on it. This is definitely much improved than the previous indicator, and I might actually open this for release now. But anyways, let me get back to the main idea here that I was talking about in terms of Bitcoin dominance. This line was a resistance that was broken briefly, a fake out twice here, and then we did have resistance multiple times. Now it's currently breaking down again. Um, if I was to say where's the real alt season that would happen, I would say it's around 53%. Now it's very, very unlikely that in these conditions we'll go down to 53%, just because the crypto market in general has a lot of volume that just completely went out of the crypto market. Um, Funny enough, as you can see by this line right here, um, this breakdown from the resistance has found support multiple times at this previous resistance. So we'll just keep this line here and wait for a breakdown from here. If we do have a breakdown from here, we could say we could go bullish on alts again. Just not too bullish, maybe slightly bullish. You want a real alt season, that would be around here, but we could still make a lot of money going long on some alts if we do have a breakdown of this support. Um, Solana has been quite resilient, by the way. As you can see, for the past 2 weeks, it has been chopping within this very tight range here, which I also have marked by my trends. It's just trading between the 140k support and the what is this, 147, sometimes 150 resistance. Okay, so this is the resistance range right now for Solana, and this would be the support range right here. A little bit of fake outs happening down to 136, but it's not too serious actually. It's not really a push um, like that actually affects Solana in terms of um, bearishness. It's definitely not bearish. Solana is very, very resilient, at least if we compare it to Ethereum as well. We did scalp a long on Solana not too long ago here as well. Let me just delete this, clear out the chart a little bit. If we look at Ethereum, you'll notice Ethereum is a bit more volatile than Solana is, and a bit more to the bearish direction. And this is a very clear trend line right here that I can see. Okay, so if we do break out above here, then we could look for a long on Ethereum at the moment, but currently just it's very choppy and it's following Bitcoin pretty much. I do see somewhat of a symmetrical triangle building up here, and judging by this direction, I would say it's sort of a bullish flag. It should break to the upside. The next resistance would be somewhere around 2800 in terms of the Fibonacci. This was a good demand zone, by the way, when Ethereum did go up. We did accurately look at that. I'm trying to look for a trend here where I could identify Ethereum's resistance level. I would say this one's a good resistance level. Previous support here. So yeah, pretty much at 2800. Not wrong about that at all. And then we do have this as well, just as a local resistance level at 27,300. Now, if you want to compare trends to our current situation, it pretty much matches up. Okay. Now, why is the crypto market behaving this way? Why is it down? Okay. Now, first of all, we all know crypto is high risk assets, and during times of turmoil in the economy, people would rather move their money from high risk assets down to much lower risk assets. But then again, when you look at the stock market as well, we did have a crash a while back, but then it quickly recovered. But still, the stock market wasn't even in a good place even before the crash happened. You might look at the S&P 500 and see that, okay, the S&P 500 is doing pretty well. It's still printing all-time highs. It might print another all-time high here, apparently, within the next week. But then again, when you look at the actual stocks in terms of like Apple or whatever, the stocks have went down quite a bit. It does seem like it recovered slightly though. Now, anyways, in terms of like even when the stock goes down, S&P goes down, whatever goes down, everybody quickly looks at gold, right? And it makes sense. Gold is printing another all-time high right now. It's currently trading at 2,500, and it's quite stable at 2,500 as well. It's not going down. I pretty much expecting gold to hit another target of, well, let's see, If there's any way to actually accurately look at this. So I would draw this trend line just to see if we'd ever have a breakdown below here, but I don't expect that to happen. Gold is bullish. It's bullish all the way. And why are we looking at gold? Why are we looking at oil as well? Um, See, gold and oil work inversely, and the only reason we're talking about this and talking about economic weakness is because of the talks about war, obviously. And when you have war, oil goes down, gold goes up, right? And then people would think, okay, well, if everybody's selling their stocks, they're probably moving it to gold. You're wrong. And here's a trend I just discovered, and I foreshadowed it by this as well, obviously. Just take a look at military tech. In the past 3 months alone, okay, not even the 3 months, the past 2 months alone, uh, Lockheed Martin went up 30%. Okay, actually, this is like 6 months, but from here to here, it's like nothing. I would say like from here to here is like 20% at least. Okay. Um, Again, when you look at Northrop Grumman as well, 6 months up. This is just since July went up 10%. Okay. Um, I think this one's another military tech. Is it? I'm pretty sure it is. Um, if you look at the 6 month, I don't think it is actually, is it? Well, in any case, I just proved the point, okay? Uh, Military stocks are going up big time. And I don't think many people are really looking at it. This is RDX. Why am I looking at this? Um, Military stocks are going up pretty high, and not much people are really noticing that. They just look at gold. Why? Because obviously gold is profitable. Everyone buys gold. Everyone's holding gold. So it does make sense. But then again, you can't just look at gold. Okay, you have to look at other areas in the stock market where the money is flowing. Uh, this is something that I kind of figured out on my own, looking at the stock market for the past 2 years. It's like that second law of Newton or whatever. Energy is neither created nor destroyed. I don't know if it's second law or whatever, but you get the idea. It's the same thing with the stock market. Money isn't, it's created, okay, but it's not destroyed. So if you're having a constant money creation and no money actually being lost, no money being burned, when money leaves one area, it's obviously going to go to another area. It doesn't just completely disappear. Your goal is only to figure out where this money is going to. And when the money is leaving these stocks or leaving a certain market, like the crypto market, you have to figure out where it's flowing to. It's money being removed from here to be recirculated into another section of the stock market. And currently, the section of the stock market that's booming is military tech, and some tech companies as well. Some tech companies went down pretty bad. Some tech companies went up pretty good. Um, it's a pretty mixed market at the moment. I think Tesla is recovering as well recently. Yes, it is. It does have a resistance here that has to break above. Anyways, I won't go too deep into the stock market. Let's just stick with the crypto. But this was something interesting that I did like to note. Um, in the short term, it seems like we might have a continuation up until 59,800, let's say 60,000 about. Um, so yeah, we are gonna have a move up to 60,000. Makes sense. Getting a rejection from there, going back downwards. Um, when we want to look at the combined order book, there's a lot of. That doesn't make sense. These orders have been there for a long time now, by the way. I'm pretty sure I sent this on the Telegram group a long time ago. And it still doesn't make sense why these positions are still open. But you'll notice as well here that in terms of short leverages or long leverages, there's a lot of heavy short leverages right here, and it's mostly by OKX, somewhere at 62,000, Binance at 63,000. Now, I've had this discussion with someone within my group, otherwise known as XRox, where he would say it's mostly spoofing, but not just spoofing, it's also a combination of the actual exchanges staking their own Bitcoin reserves on leverages to try and trade the market. So it's basically a fight between the exchanges. Um, I do think it's plausible um, to some extent. But then again, I don't understand why these orders are open here. We haven't even gotten close to them in the last month. Um, but also, yeah, looking at the short term, we can clearly see that the short orders are much bigger than the long orders. Now, in terms of futures, I would look at it as liquidity that's going to be swept. So that matches up as well with the liquidation heat map here. Um, but then what you really need to look at to figure out, okay, if there's going to be massive selling happening or triggered, you'd look at spot. Now, I always used this before, and it used to be very, very useful. You always saw massive limit orders being placed. People were already like putting on their own projections of where the market is going and such. But obviously, recently, now that the market volume is very low, it's not useful anymore because there's not that much limit orders being placed. You see a lot of limit orders placed at 49,000. Okay, people are expecting it. They're waiting for it. It might not happen, by the way. I'm not saying it will happen. Just because we placed an order at 49k as well doesn't mean it will necessarily happen. But just in case we do have this massive wick, sudden wick for a split second like that, we can at least trigger that order of 49k. We'll have bought some Bitcoin at 49k. That would add an amazing discount. Again, it's not guaranteed it will happen, but yeah, many people are just placing their orders just in case it happens. So why not? But then again, I always used these sell limit orders as gauges for a predictable resistance level. But right now, as you can see, the volumes are very low. Not much orders are being placed, and it's very hard to really use this as a gauge. You do have some small wicks here at 61k, so it shows you that okay, it's a strong resistance a bit. Some at 62k, and then some are like way up at 65k. So it's really really hard to trade the market. That's just the entire point that I'm trying to explain here, which is right now we're in a condition where the market is very confusing, very choppy, and really the only profitable method of making money would be taking some scalps, but even then scalps are very risky because let's go down to lower time frames such as a 15-minute time frame. You'll realize it's extremely choppy. There's no one direction for it because even in the 15-minute it's going up one candle, going down one candle within the same closing and opening price of every single candle. It's not just like okay, we have um, so this candle is like unpredictable to trade. Okay, you need at least like 2 or 3 candles going up like this. That would make sense. Okay, if you can find this kind of trend right here on the short time frame, then you could trade this. But this area right here, it's impossible to trade. This is obviously going to trigger a stop loss if you're going to go into a long, and it's hard to predict that this will happen short because, like I said, orders are not being placed here. They're just being clicked in right away. Okay, they're not being placed as limit orders. They're just being sold instantly or bought instantly. And yeah, so it's very choppy. You cannot trade this, not not through swings, not through scalps. The only thing you can do is betting. Okay, you either bet that the market is going to go up from here, or you bet the market is going to go down, and you just open a swing long or swing short. Now, generally, um, there is no clear direction even on the short or the long term time frame to figure out if the market is going to go down or up. Um, Generally, this trend line has been working quite well. I had this drawn before I deleted the chart. Um, so wait, this one here as well, or we could just keep the fib. But generally, I mean, it seems pretty clear where I'm going with this. So you do have this triangle right here. Now, from if we're gonna use this as a flagpole instead of using this weird choppy upward motion here as a flagpole for this triangle, this would be bearish. Okay, a breakdown from here would be bearish. You're not looking for a breakout from the top, you're looking for a breakout from the bottom. So I would say it's a 70-30% for the bears. And if you do really want to take that bet, I would open a short position right from where I expect a breakout to happen below here. Put my stop loss at this resistance level just in case it goes back up, and I would hold that swing long up until down to 49k. Book some profits at this first zone of 56,600, the next zone here at 54,000, and then hold like maybe 20 or 10% of the position of the remaining position down to 49k. That's viable. Okay, it's up to you if you want to do that, or close some at 52k as well. That's your thing. So that's the only thing that you can really do. Okay, in terms of like a breakout to the top side, it's very unlikely because this is clearly a strong resistance right here at 61,400. Um, I would say you would need to wait for something like this, maybe like a breakout to the top. Very unlikely to happen, but it might happen. If it does happen, you'd need at least a 4-hour candle or two 4-hour candles, or just let's just say a 1-day candle close above this, a successful retest of this area support to flip it from resistance to support, and then a continuation upwards. In that case, if we do see the successful support here, support resistance flip, and then a continuation to the upward move, then I would enter along from this same exact area. Okay, and my stop loss would be somewhere around where a breakdown from the triangle could possibly happen. So let's just say somewhere around here maybe, or the previous bounce of the triangle from where the upward motion happened. So in this case it would be around here, and then your targets would be set at pretty much the previous resistance levels, first of which would be 64k, second of which would be 68k, and then you can see if you want to continue holding up until 70k here. So let's add a horizontal line here, horizontal rate, there we go. So these are the only trades that you can take, and in any case, uh, if you take either trade, I wouldn't even call them trades. I would just call them bets. You're betting in the market right here. There's nothing clear. That's why I told you guys I'm trying my best not to enter this market, because especially if you look at alts have been bearish, and then they've also been moving into sideways action with much less volume than Bitcoin, much less volatility, very small movements here. Um, Same thing here, TIA. I'm pretty sure I took a good long on this, exited a bit early somewhere here, and then we've been on a constant selling. I was expecting to find some support at these levels where, okay, I'd say I would have taken a long perhaps. It's a good thing I didn't, because obviously this level has been broken down and it's just retesting um, the bottom here right now, and I guess it would be safe to assume that this is a demand zone right here, just in case we want to trade this again. Um, Looking at anything else as well, very choppy, nothing clear. Alts are very confusing. Yeah, it's complete. This market is completely untradeable, guys. Now, during the moments we do find a sudden sudden trade, like for example this breakout of the trend line here that we did take. Is it this one? Not this one. We deleted it. Anyways, yeah, there was a breakout of some trend line here. We did trade it, and we made some profit. We made some good profits, like 50% ROI, right around just the first TP. and then if you kept holding until the second TP, I think it was around 70% ROI, and we did that from one trade, so it's good. uh, if you find at least just one trade and it's super profitable, it's way better than taking a risk with like 10 different trades and five of them are most likely going to be losers, and then the other five might be winners, but they'd be with like very small profits, probably even less profits than you would be losing on the five losing trades. So yeah, I would rather just stay safe. And in terms of like technical analysis, I know you were hoping for something clear, like oh shit, we're okay, we're gonna go up or we're gonna go down. Nah, I can't really promise you anything because look, it's very easy to find a narrative that would match your bias and then try and trade that narrative. But then again, you can never force something that doesn't happen because the market doesn't do what you want, it does what it wants to do. Okay? So it's not fair to stick with the narrative and then try and find reasons to fit that bias. I could go into a bunch of news here. Okay, let's just type Bitcoin and then enter news, and then you'll see like a bunch of news like, oh, 75% circulating bitcoins have not moved for 6 months is like bullish, okay, because whales are like holding them in the wallets, they're not selling anything. And then you have this bearish analysis for Ethereum, where Ethereum could possibly be bullish. I mean, like I said, right now it does seem bearish, but if it breaks out of this triangle, it's gonna go bullish. Um, and then you have like titles like "It's over," a U.S. crypto crackdown, and then Norwegians owning Bitcoin apparently. Um, Someone bought Bitcoin here, bullish, plunged 28% bearish. U.S. government moved 10,000 Bitcoin bearish, tumbles down under 58K bearish, and then MicroStrategy stock is beating Bitcoin. I don't know, kind of bullish. Like you can find literally headlines for all kinds of narratives. You're bullish, there's headlines for bullish. You're bearish, there's headlines for bearish. You can't really trade based on narrative or your own bias. Okay, you'll always find a narrative that matches a bias, but like I said, you'll always want something from the market, but then the market will continue to do what it wants on its own. So yeah, for now we'll just stick to being safe, and if you do want to trade and you're hoping to make some money even in this boring sideways action right here, um, do consider entering our Telegram group, because who knows, sometimes split seconds I could find a really good trade and then we just enter really quickly. Um, Most of the times, did we enter this? Yeah, we did. So see, like there was a short here on Link, a quick scalp that we took, and then yeah, we closed like 50-70% TP1 or something, and we made some profits. You know, like every once in a while, I do find a sudden trade that just like works. You know, otherwise sometimes we might open a trade and then close it. Um, like here, we pretty much entered, or yeah, somewhere like 83.9 at the lowest, and we closed it almost at break even here, 0.826, because it reversed. There's some very hard trades here, okay? Most of the signals I give are very safe. I would rather not give any risky trades because personally I wouldn't enter those risky trades myself. Um, as you can see here, like we took a scalp on Solana as well, and we won it basically. And most of the times when we're losing trades, it's basically at break even. We're not losing any money because, like I said, I'm trading safe trades. I'm not taking high risk. We either make small profits or we don't lose any money at all. There's no two options here. There's no making huge amounts of money, but at the same time there's no losing huge amounts of money. It's either making small profits and not losing money at all, or you're taking a risk at winning a lot of money but also losing a lot of money. I would consider myself more of a conservative trader. It's up to you if you want to be aggressive. There's a lot of groups here that are aggressive. Oh, this is actually something interesting I wanted to show you guys. Now I'm on a bunch of trading groups here. I'm not gonna call them trading groups. Actually, more like signal groups. I'm half the times I don't trust their technical analysis, but the only reason I do follow them is because it gives me an insight on what the market sentiment is at the moment. Sometimes it goes along with my bias, and I do trade along with them. Other times I trade completely opposite, and I would look at their setups, and I would pretty much use their stop loss as my own TP. So it's very useful to be in these groups, not because I'm telling you, okay, follow their signals. Definitely not, because a lot of times their signals are really bad. Um, and obviously, there's no 10 out of 10 winners anywhere in any trading group, not even me. Um, but it does give you a good idea on what the market sentiment is. And second of all, um, I do use it as somewhat of an idea, because they discuss like some certain coins that I might not be watching, and then I'd look at it and go like, okay, this is interesting. Let me run my own technical analysis on this, and I'd find a good trade. Whether it's following their bias or my own bias, I'll use it for trade ideas. But anyways, the point I wanted to make here, Fat Pig Signals. Okay, it's one of like the uh, biggest groups for trading crypto signals and all that, and they pretty much set this on their own, and they're very aggressive traders, by the way. They're high risk trades. I've seen the trades they do. They always enter like 25 50x with very very high TPs. Like, it's not like small increments of TPs. No, they go like swing high TPs. um I don't know what their win conversion is like, but I do know that they have a very strong fan base, and they're very aggressive traders. But imagine the fact that even them, as very aggressive traders, have given out this message. So they're telling you that it's bounded by the fib levels here that we talked about, the zero 0.6 and 0 0.7. Um, okay, the zero 0.6. Yeah, I drew the fib wrong right here somewhere. It should be the other way around. But I think this spot one is correct. Or is it? No, it's also wrong. I don't know what fib they're using, but this is the fib that I'm sticking with. But anyways, it's bounded by two fibs, obviously. Um, they are saying that it's going to continue until a breakout occurs, waiting for a close above 61,000, which is exactly what I'm waiting for as well. Is exactly what I told you. And then a breakdown as well could signal deeper correction. In any case, they recommended refraining from any action as further consolidation remains likely. So imagine these are the most aggressive traders and are telling you don't trade the market, because it's very very unclear. So yeah, that's pretty much it. I guess that's all I wanted to really talk about. There's not really much to talk about besides that, and I think the videos are actually already long enough. I could have gone into a lot more details, maybe looked at other people's analysis, but for now this is enough, because really the market, there's not really much going on in the market, not really much to look at, and not really much to analyze. We don't really have a lot of information to analyze. But yeah, that's pretty much it, and you kind of got an insight on my outlook in terms of the money flow in the stock market at the moment. Uh, yeah, hopefully next time we make a video, it's actually useful and there's a lot more action happening in the crypto market. But then again, this is what you can expect from crypto during the summer. It's just boring sideways action. I wouldn't really expect volume to return into crypto until maybe December or January at best. But that's also assuming we don't enter a full-scale World War III, because that's also a risk that's haunting the entire market, not just crypto, but also the regular market, and that can be clearly reflected through gold's continuous printing of all-time highs and continuous moving upward. So yeah, that's pretty much it for today, guys. Thanks for watching.